Happy Tuesday, everybody. This is Craig. I'm a senior finance officer here with Credit Suite. Today, we're going to be going over, this is our 1 week a month that we try to get some information out from the finance team. Unfortunately, Suzanne is unable to attend today, so I'll be by myself. So please give me a little bit of extra time, a little bit of patience on getting to the questions as they arrive. But I'll be going over today equipment financing and leasing and non-SBA term loans. I just want to give a quick overview of those two programs. They seem to be the top two programs that we've been seeing lately, and I wanted to go over some of those in a little bit more detail, so you'll know basically where we're at and how we can move forward and trying to get those into us and answer any questions you guys may have at the Q&A session at the end. Let me see here. Let me go to the dashboard real quick. Let me see. All right, can anybody give me a little wave if you can hear me and if you can see the screen? That would be great. Let me know that you can hear me and that the screen's you can view it. All right, thanks, Brian. I'll take your word for it. All right, let me hold on. Let me. Okay, we're going to start off with equipment. Hold on a minute. We're going to start off with our equipment leasing. Equipment leasing, and that covers a whole bunch of different industries and types of equipment. That word is obviously a broad word, from everything from over-the-road trucking to a pizza oven. It all falls underneath the word equipment in this type of financing, depending on the industry. A lot of times when it comes to equipment leasing and or financing, time and business is important. We do have a startup app only program up to 50,000, and that's with our A credit. But with 2 years time in business, and our A credit is 720 and up. As you can see, 2 years time in business, we can go as low as 625. So that's it's a huge difference in the range. We're also looking for an 80 or higher paydex on the business credit score. 100% ownership means that we need to include 100% ownership. So if there's a 90-10 split or a 50-50 split or a three-way partnership, we need all three owners, both owners. So that's what that means by that. Hold on a second. Like I said, we do applications only up to 100,000 on a lot of our with more than 2 years. We can do app only. Means that we can do just a one-page application, a detailed vendor invoice or quote that lets us know exactly what the equipment is and who the vendor is selling it, and it gives us a better idea, because approving the equipment is just as important as approving the client. 3 months bank statements, because we'd like to see some cash flows to see if if it matches the payment that we were able to give them or not. So that's why we collect up the bank statements as well, business bank statements. Financing and leases, like I said, time in business 1 year, credit 600 plus depending on the industry. Revenue could be as low as 0 depending on the strength of the credit for our startups. Our restricted industries, airplanes, guns, and boats. Anybody that does that, and a lot of times cars. Car sales is a very restricted industry as well. Bankruptcies and foreclosures, none in the last 5 years, and that means we still can work with BKs that have reestablished credit, but we're 5 years away from the discharge or dismissal. We like to see trade lines 5 or more on the business credit reporting. 100% ownership. Existing loans are okay, and when we do operate in all 50 states for equipment. The product features, we go from 1,000 to 250. Terms are anywhere from a year to 5. We do charge a document fee. Repayment is monthly. APRs, as you see, is a broad spectrum because we do go so low on credit, depending on the type of asset as well. Industry, time and business, cash flows, business credit, personal credit, all as a factor. And we can structure it into an EFA, which is an equipment finance agreement, or for those savvy business owners that like to do leases for tax purposes, we could do residual leases, meaning that it's basically just like an EFA, but we'll structure it in the contract where it's a lease and the last 3 payments of the term would be the residual. So they obviously would still own the equipment outright. It's not like a traditional lease like you would if you were purchasing a car at a car dealership. So that's pretty much our equipment program. It's we have a lot of industries that we do cover, and there are generally, when we come into buying equipment, it's in the second or third year of businesses anyways, that when we see the time in business. Some of the things that we have, just for general knowledge, as I know it's kind of popular right now, some of the things that that we find difficult to do is food trucks. We got a lot of really popular restaurants and small cafes and stuff across the country that want to expand their product into a food truck, and then get that product out. Food trucks are specialty items, so we're basically going to be able to finance the actual truck itself, but a lot of the modifications and stuff in there would be a secondary type of funding. So generally those modifications for deep fryers and ovens and everything that makes it into a food truck sometimes can be more difficult than not when we're trying to get a full-blown approval to cover the total cost of a food truck. But they're each is, it goes back to the qualifications in that instance. Our non-SBA term loans. Non-SBA term loans, again, with non-SBA, we get a little, we're limited obviously because we go out to only 5 years. SBA, for the sake, I'll give you an example. Let's say a company makes 300 grand a year. And that's their annual gross. So utilizing that cash flow, if we were to look at trying to get as much money as we can in a term loan, we would be capped at right around 25 to 35% of the annual gross revenue on a non-SBA term loan. And the main reason being is because we're worried about and what we utilize to approve people is our revenue to debt ratio. And that has to be a certain amount for us to approve. So with it going out only 5 years or 60 months, obviously that monthly payment would be a lot higher than if we, were to push that out to 15, 20 years. So on an SBA loan, even though it's a lot longer process and a lot more hoops to jump through, it gives you the benefit of being able to borrow 3 to 4 times what you normally would because of the term. We're able to go out longer term. That's the main difference between SBA and non-SBA. Once again, we do look at the paydex score on the business credit. We like to see 2+ years time in business. 660 FICO for our monthly payment program. 100% ownership is required. The minimum annual gross revenue for us to entertain a term loan is $180K a month. One-page application is 6 months bank statements up to $100,000. Which is really, really good because, to borrow up to $100,000 without financials is we call it a revelation. I haven't seen that in a long, long time, if ever, but we're able to do that now. The last 2 years financials we would need for 100K and up. So as long as we stay around 100K or below, very minimal documentation from the client to get approved. And if we're looking for larger numbers, larger approvals, then we'll need more financials as they come forward. Let me see here. Like I said, terms 2 to 5 years, monthly payments, APR on our non-SBA term loans are 6 to 12.9% APR. And then we're already to the questions. So I know I went through that kind of quick. I wanted to make sure that I touched base on those. And I do have some extra time, so I can talk about our UBF program as well if you guys have questions about that. Our UBF program is one of our big popular programs. It's our unsecured business financing program. Let me be very clear, it does require a personal guarantee for that particular program because that is what allows us to get the high credit limit credit cards for startup companies that don't have any revenue. It's a perfect program for that. I also have a video that on that program and a video of this that I'll be sending out to you guys, and hopefully we can post it in one area. I've got to get with IT on that. Suzanne generally takes care of that, but like I said, unfortunately she's out today, but she will make sure that she gets out to all the attendees today, so you can have a copy of this recording here on the programs. And also we have a video that outlines, it's a white labeled video that you can utilize yourself for your future clients that explains our unsecured business finance, our business credit card program in detail to your clients. Find that to be very, very helpful. Let me see here. If you guys would like, if you guys have any questions at all, don't hesitate to type them in. I'm trying to view them now. I'm not too great at this program, GoToMeeting, but I do see the questions area. So if you have any questions, don't hesitate to type those in, and I'll do my best to answer those questions. Let me see here. Attendees, I know I got a couple here. Give me 1 second. All right. All right. All right, I'm going to go to the attendees. Has anybody asked a question yet? If you have, please raise your hand. And the little hand gesture, I see Joe's here. Mr. Torres is here. Let me see here. Does anybody have any questions about those programs at all? Good question. The largest loan amounts available for the equipment financing, we can go pretty high. It really all depends. I've done a $5 million operating lease agreement. So it all depends. As long as it's relative to the size of the company and what they're looking at, we can go as high as 50 million on our equipment. A lot of times when we get that high, it's either a large manufacturing company that has a specialty piece of equipment or a fleet of trucks or cars that they want on a 3-year rotating operating lease, which is really good file to get because that is residual income every 2 to 3 years as they update their automobiles through the program. The programs for those of you that got in late, here I'll go back if I can figure out the back button. Let me go back. We're talking about equipment financing and leasing, and we're talking about non-SBA term loans. Let me scroll through this, sorry. Cranes, yes, yes they do. We love construction equipment. Construction equipment is great industry. Yes, so cranes, bulldozers, you name it, earth movers, all those, we like all of those. So yes. Let me see here. For the programs that require 100% owner involved, do they all have to qualify FICOs? Not individually, but collectively. That's a good question. They kind of look at like when you buy a home. If one person's got a 780 and the other one's got a 650, then you're going to be somewhere in the 715 range. That's kind of how they look at the ownership on there. And we can also talk about realigning ownership to get larger approvals as well. So sometimes there's 10. Every time I see a company's got 3 owners, there's always the one owner that's always bringing them down credit wise. But we have ways to work around that as well. Be sent to this program. Let me see here. What would be our payout for a customer that we send through this program? I'm assuming you're talking about, hold on, something added. I'm assuming you're talking about commissions. We pay 50% of the commissions that we earn to our executive partners. So if you're sitting in a direct funding client, then whatever the commission is that we get, we generally let you know in the beginning, because sometimes it's different. Sometimes we need to negotiate with the client if the interest is too high, or we're trying to say, get them to take the approval. So our points, or if you will, our percentage of commission we get from the actual banks. So that comes through us after funding. We don't charge upfront fees or anything like that on 90% of our products. But we split everything 50-50 with our affiliate partners. All right, hold on, guys. Give me a second. I'm still trying to scroll through all the questions here. Events and minutes. Find. Yes, okay. On the UBF program, it says, that does work great with real estate. That's one of the industries that are Uvf program, it really helps, especially with startups for that, because they're going to need somewhere to have expenses and to save their FICO, more importantly. So we give them 60. Our average approvals on UBF are 60 to 80,000. We max out on 150, and that would be interest-free working capital for that startup company with no effect at all or nothing reporting to their personal credit, so they can keep their good 700 plus scores, because they're going to need that to get good rates from me on their house flipping, financing. So yes, we definitely will send out that white label for you. Realignment of ownership. Well, that all depends on how aggressive the owner wants to be and how old the company is. If they want to remove an owner, it's all about filing with the state and getting the proper paperwork done on that. And then after the funding, then they can add whoever they want to back onto their company. But there's different ways around that. But every situation is unique to that particular file. Let me see here. Sorry, I'm trying to get to the next question. It's hard to get to. What is the turnaround for someone who qualifies for an equipment loan? Equipment loans are rather quick. We can get those funded if they're non-titled, 3 to 5 business days. The only time it takes longer than that is when it's a titled equipment and we got to deal with insurance and insurance underwriters and getting the title from the vendor and working the title issue before delivery. That can add a little bit more time, but that basically, there's not a set time on that. That's just how quick the title company can work with the vendor who's selling the equipment to get the title over, to get the right lien information over. Let me see. Make sure I'm looking through some questions now, guys. See if I didn't miss anybody. All right. Large loan, I got that one. All right. Is there any other questions, guys, about these programs at all? Like I said before, the slide deck, a copy of this webinar will be available to you guys, and I'll make sure that I get out the white label UBF new video that we have. I think you guys will really like that as well. I have a question here. Is there an updated list of loans and interest rates to offer? Yes, it's in. I will shoot that out as well. That will be underneath your partner resources. That has all of our. It even has videos back there, and it has our cheat sheet or commission breakdown and what the quals are for different programs that we offer. And the reason why we keep it back there is because it's a living document. Basically, it changes all the time. And if we were to send out the PDFs on that. Pardon me, if we sent the PDFs out on that, then by the time you got it in 30 days, it'll be old. So that's why we keep it there for you guys to look at. All right, hold on, let me see if I got where will we be putting the UBF video? We have a mailing list for you guys. So we'll be sending it out to you individually, so you guys will have it. You have my information here as well. Here, let me go back down. This is my my email here and my direct phone number, so you guys can call and email me as well. I can start sending those out, but I'm going to have one of our IT people do get the list of attendees for today, and then we will send out this and along with the UBF to every one of the attendees. Okay, so hopefully that'll help. All right, guys. Well, I'm sorry that it was a little short. I wish I could have made it a little bit longer, but Suzanne was unable to attend today, and I apologize for that. But I wanted to make sure that I got this information out to you. Just keep in mind, we are going to do this once a month. Next month, we're going to be talking about 3 or 4 different programs that we have, and we'll go over those in detail. Hold on, let me see what the actual percentage was split. Oh, I got another question here, guys. Hold on. Let me see here. Please explain in detail the actual percentage are prior to the 50%, the split with partners for fine. Please explain the actual percentage are. That really all depends on the program. If we're doing commercial lease, or commercial loan, excuse me, for a commercial building, if it's real estate, or if we're doing a purchase order or accounts receivables, all the different industries pay a little bit different on the types of financing that we do. So what we do is we let you know before the close with your finance officer. You'll know what we have built in there, and then once that commission is settled upon and we get it finalized, then you'll know what to be expecting when the deal closes. And it also depends too. The more qualified a client is, the less interest. Obviously, they're going to be a paper, so there's a lot less room for us to wiggle in larger commissions for our more qualified clients. Private equity loans for real estate investors. We do have a couple of sources that way, but we normally stay with our hard soft money lenders on our real estate investors. That's a whole nother set of programs that I'll probably be doing the next webinar, because the real estate, that would probably take up about a good half hour, 45 minutes just on that one lending product. So I'm going to cover that next time when we go into it. But there's also information in the back office, like I said, that covers our real estate types of lenders and loans that we do. We're very flexible. We do everything from interest only for a certain amount of time to 30-year ARMs. So it really all depends on the client, what they're looking to do. Is it a flip, or is it a buy and keep? Are both stressed? Are they not stressed? Is it a multifamily? Is it a there's a whole bunch of different scenarios in there. So for investors. Can you reject the points offered by the lender? Not sure really what means to reject points from the lender, but yes, if you wanted to work for free, then we could do that if that's what you're asking. Or generally, there's there's origination fees when it comes to lending to anything to do with real estate. That's going to be an origination fee or something, and that's how we would get paid. Anything else on term loans, revenue loans, all those other types of traditional types of business financing, all those are set ahead. So depending on the amount, that would be dictating the commission, because it's built into the actual loan itself. Real estate loans, some are based on business credit, most are based on personal credit, but we can go as low as 550 FICO scores. We prefer doing it through a business, so we can assign it to an LLC or an S corp, depending on how they're, however they're formed. Is there a specific application form for equipment finance transaction? Yes. What we generally do is when you send in the client and they're looking for equipment, we have the finance officer would have the conversation with the client, and then we send out the email that requests the equipment to app, because it may be different depending on the type of equipment. But let's say medical and construction would be too different. And then we ask for 3 months bank statements and a detailed invoice. We get that directly over to the underwriter. It gets reviewed within 24 to 48 hours. We generally have numbers put together in terms and rates and terms for the client to go over. Depending on how you're set up with us, we'll either go directly to you with that information, or update the client, or go update the client and then update you afterwards. Either way, it's completely transparent between the whole transaction from approval all the way through. Let me see here. Is there another question? Make sure I get everybody's question here as best I can. All right, that was the last question I got about the specific application. I don't see another one in there. Like I said, guys, we're going to try to get more of these types of classes to you, so we can understand a little bit better on what we can fund and what's more difficult to fund, and how we can qualify and set the proper expectations with the clients. Within relative. I mean, sometimes, guys, and sometimes we see files that are coming in where we look at the annual gross revenue. It's very, very important to try to be accurate on the FBQ, the funding blueprint qualifier, as close as you can. A lot of times we'll see that, they make 90,000 annual gross a year, and then we say, how much are you looking to borrow? And it's 300,000. That's kind of not very realistic type of, unless there's something huge that I don't know about behind the scenes that they could pay for later. But that would definitely be something in collateral. But yeah, setting the right expectations with the clients is extremely important, and letting the FO knows, the FOs, we read those FBQs, and they let us kind of give us an idea on what direction or what type of conversation we're going to have with your clients. So the more information, the better. Average commission rate like 3% or between 3 and 10% before. Okay, let me see. Commission range generally are right around 3 points for equipment, 3 points on revenue, MCAs. We generally do between 2.5 on term loans, depending on the group of the term loan. Lines of credit are a little bit different depending on the draw. If they get a $100,000 line of credit and then don't take a draw, because we get paid on the draw, not the approval. So that could change things up. So it really, once again, it really all depends on the product, because there's so many different types of products that our clients would have. Our UBF is a solid 2.45. So that's already built in, and that's negotiable too. Obviously, we've had some people will go, oh, I'm not going to pay that, and then that's when the FO would call you and say, hey, if they're balking on that, I talked to him. He said he would consider, 8%, but that's going to eat into the commission. Would you be willing to do that? We don't just do that without your permission. It's your client. So we'll kick that back to you for consideration, and we'll do whatever you direct us to do. Let's see. I'm trying to get this one question here. Hold on. Is there a commission of financing? Is it before the split? Okay. Yeah, before the split on there. It's the same. So, I'll give you an example. For those of you that are experienced, and especially in the revenue world, you have the ability to charge a lot of money on top of that. We don't. We default to just 6%, because we found that when we're able to do that, we have a 78% renewal percentage on all of our revenue and MCA loans, which is extremely high. So I would rather fund somebody 2 or 3 times that come back to us because we've got a lower rate, than anybody else that would, try to bang somebody for an obscene amount of money and then they don't ever come back, or they get a better offer on the renewal from somebody else. So that's kind of our MO when it comes to revenue and MCAs. We're not huge fans of that type of financing. We explain to the client that, if you have a specific reason for the money and the business makes more money than it's going to cost, then we recommend the loan. But if there's certain situations where that loan just would not fit, and we would advise them to go a different direction, because we're always looking out for that. But hey, if they say they want it, we're not going to tell them no. We just advise them, depending on where they're at. All right, let me see here. Hold on. All right. Well, guys, it's almost been a half hour. I am going to let you guys go. Hopefully, I answered a lot of questions that you guys have. And like I said before, we're going to be doing this once a month. So keep an eye out on the type of webinar that we'll give. Based on the questions and stuff that I keep getting, I'm definitely going to cover our real estate programs, and that should be 30 days from now, or we're going to try to do them on the first Tuesday of the month. I know we're a little bit late this month. Ty bumps us whenever he wants for his webinars, as he should. So we kind of fit in with that, but we're going to try to keep it on the norm of the first Tuesday of the month, so you'll know that the finance department's time to come and share our knowledge with you, and hopefully we can improve our relationship with you guys by having a better understanding both ways. So I appreciated the time with you guys, and I hope you have a great day, and we'll talk soon. Thanks.